morning. I'm joined by Simon Maughan, co-head of European equities at MF Global. Simon, thank you so much for joining us. It's still a very tricky situation. Sure, they need to lend more, but at the same time, we can see the European debt crisis is not going anywhere, and balance sheets aren't looking very strong.
Well, that's right. The reality is the government doesn't have many sticks to beat the banks with. They want to impose higher capital. They'd quite like to break the banks up. But given the international regulatory environment, it's just not going to be possible to do that without inflicting permanent damage on the UK. So what they can do is go after them on lending targets. But the banks really know that we need to deleverage the economy, not re-leverage it. And that's why we're getting this impasse.
What are we expecting today? How many banks will have failed the target set by the government?
Well, if we look at the last 12 months as a guideline, RBS, which of course has the biggest government stake, has perhaps unsurprisingly been closest to targets and has actually been doing just about what it needed to do. Lloyd's, the other place where the government has a big stake, has been closer to targets but missed them, as have most of the other banks. And what they've done is they've blamed a lack of demand. Now, of course, what the government is saying is you're just not trying hard enough to drum up that demand. But the reality is the banks can't loosen their lending standards and give out bad loans without causing detriment to shareholders, of which the UK government and ultimately the taxpayers are the largest players.
And of course, Simon, it seems pretty reasonable for banks being reluctant to weaken underwriting standards to meet these lending targets. And you were saying really that the government doesn't really have a stick to beat the banks with. What happens after today's revelations? You know, will the government have to take further action?
Well, it's quite early in the year, so that's the one benefit about right now. I don't think many of us are expecting bank lending to accelerate rapidly through towards the end of the year, but right now, today, this is probably noise rather than leading to further punitive action. But there will be a lot of noise. This is an opportunity for the Lib Dems to emphasise their differences with Tories. We know post the recent elections they're desperately keen to do that. They will be jumping up and down saying we must beat the banks up further, we must force them to make these new loans, and there'll be a lot of negative news flow for the bank shares.
Simon, it seems that actually the banking sector will feel a lot more pressure going forward in the coming months or the coming quarters. How hopeful are you that these stress tests in Europe will actually appease market concerns?
I'm afraid I'm not very hopeful at all. I mean, these stress tests are now becoming an annual event, but as long as they're an annual event that don't accord the likelihood of some kind of sovereign default across Europe, then a large minority of investors will just dismiss them as completely irrelevant and somewhat hiding the truth. You look at the price of Greek debt and indeed Portuguese, Irish and even increasingly Spanish and Italian debt, some level of rescheduling is increasingly being factored into markets. If the stress tests don't adopt that, they'll be dismissed as irrelevant.
And amongst the UK banks, which is the one that you're most concerned about?
Well, I mean, I have to be most concerned about Lloyd's right now, although, as you mentioned in the introduction to this piece, a number of downgrades mean that mainstream opinion is finally coming round to that view. We've held it for some considerable time at MF Global, but my concern is that the ICB, the Independent Commission on Banking, is going to force an additional 300 or 400 branch disposals on Lloyd's over and above the 600 that the EU want. And that will really be detrimental to their market share. And without undoing the HBOS deal, it will take away most of the benefits of it.
Simon, thank you so much. Simon Maughan there.